All right, happy Friday to all you devils out there. Sam here with you. Whoa, let's see, it's about 12:40 here in Austin. Of course, we're going to dig into Bitcoin here. I've got the longer term chart out, and we're going to circle back to this and then look at some lower time frames as well. A few interesting things to note. Now, before we do that, just a little housekeeping here. For those of you that perhaps more new to finding us here online, or members or subs that didn't take advantage of the Black Friday special that we do have a New Year's promo going on. We'll run this. I think we run this until the 3rd. So this will be over on our Twitter feed. If you couldn't find it, you could always just come back here to the video or write us. We're very responsive. So if you have questions, but the main thing I just want to point out here is the discounts here. You have to use these. Number one, they have to be capitalized. So it has to be NY in caps, 20, 25, 30. That's the big one on the 12-monther. But even still 15% off of the regular monthly. Now, this is for the educational membership only. Right? Social at $49 a month is already so reasonable based on what you're getting here. So this we'll run this, as I said, through the 3rd, midnight of the 3rd. If you're interested, you can either reach out to us or you can find these codes on our Twitter feed or back here in this video. Additionally, as many of you know, we also have a very active indicator site here for NinjaTrader 8, and then we're running the similar promos here for New Year, and we've already had quite a few people taking advantage of this. So it's 20% off of any indicator, right? Again, you got to do this in all caps. This is New Year 20, distinguishing it from the membership. 30% on an order of 500 or more, right? So if you're buying multiple indicators or some of our templates, and then 40% if it's 1,000 or more, again, all caps, New Year 40, and that will just automatically discount it for you in the checkout process. Right, so there's all the housekeeping done. Let me come back. Let's go back out here to the long term. So I was off last week with the holiday here, and not a whole lot has changed here. I don't think we have any more clarity per se as to how we're going to finish this. Well, let's acknowledge a couple of things, right? So this inside channel here that I've been referring to for many months now, this is 23.6 off of the median line, just keeps us nicely contained. The one thing I would draw your attention to is this internal trend line. This trend line seems to be significant to the market here. So if we are going to break here and start to move away from that, I think that will be very telling. It's at this point difficult to anticipate what's coming here. Now, there's a couple of clues here just based off of traditional Elliott rules and guidelines. And it starts with this. Now, I know we've reviewed this many times here, but just again, in case we have some new subs or new students. So the idea being here that this is a sharp correction, right? So thus, we're looking for something that would be an alternation to that, right? So guideline of alternation, not a rule, right? I don't care what anybody says, not a rule. It's a guideline here. So what are we going to get here, right? So now this is open to much interpretation, but I do think, well, here's what I think with certainty. It's not a 5. And in many ways, as a result of the fact that we get an expanded B wave here, it really forces the idea that we don't have a 5 here, because while this is one of those rules that I struggle with. If you were going to call this a 5, right? Let's just oh shit, here we'll do it this way, because you actually can do it here, and then you can get a 5 into the ABC. So you still end up with the expanded B. But if you're going to call this a 5, I go back and forth with Sensei Tudum on this, who I'm going to reference his view on it here. I think this is a dumb rule, right? If we're going to go 5 and then we're going to have a 3 and then I get a 5 out of this, right? If I get that, that's a zigzag all day in my mind. But I know that breaks the rule for purists, right? We can't have in a zigzag, we can't have the B wave going beyond the start of the A wave. So thus, we have to treat this as a 3, right? So we can't. Now, fortunately, right? It's really not a force fit. You can get an ABC into an ABC into an ABC. Now you do have to truncate the C, which is why it leaves that possibility here that you could call this a 5. And again, I think we've been through this so many times. I don't want to dwell here, but as it is right now, per rules and guidelines, WXY into an A, B, C into a B. Now, what are we going to get here, right? I think 2 weeks ago, I titled the video, is it going to be a 5 or a 3? We'll know what we've got here when we get some clarity. Well, despite the, oh shit. Well, what, A, B, C, right? That would be just textbook, right? So we'd have to do it as a 3, 3, 5. Now, we're going to get 5 here. Well, it's not a, no, as we go down to the smaller time frames here, there's not real clarity here as to what we've got here, because it can be the liquidation wick here makes it difficult because there's no subdivision in it. So thus, there's really two things here. Again, referencing the fact that we get a sharp correction here. Well, we got a couple of scenarios here. We could have the flat, right, which would put us down here challenging these lows, which it's not unreasonable here. Now, look, of course, how that would play with regards to the way the median lines are framing this here. Actually, I've switched this here to the 786 since we just have wicks coming off here. So this would be the 786 down here. We come through there. Now we've got our nice flat, which plays into guidelines of alternation with the sharp correction we have here. Put in the 4, test the lows. We've got very strong support down here. The geometry would fit. We pop up for a 5, and this puts us at, oh, that'd be 120. I'm just using the median lines in an algo target here, although that's not necessarily relevant as a target. Oh, I'd be more inclined to be looking at this, right? I'd look at the length of the 1 to do it in classic Elliott, right? So then now note. So you see how that's coming in here. Now note, I am in log scale. So length of the 1, if emphasis, if we're going to test this low down here at 28 and change, well, now 100%, right now, look where that is relative to the 23.6. It's literally on top of it. So 126.550 would be a reasonable target up here to complete this impulse. Now, nothing says we have to stop here. It's just if you want to have a reasonable target, and you want to use both a combination of some Elliott and some algo targets here. Well, that's a pretty fat one, and then it fits in nicely with the median lines, right? So you've got this kind of a playbook here. Now, so what's the alternate here? Really, I think, oh shit, I mean, anything's possible. But the alternate here that would stay consistent with guidelines of alternation, and we've looked at this a couple of times, is if we're going to do a triangle. So we'd get an A, B. Now, questionable how far we go here, and this remains to be seen. Now, do we get an E here, a D and an E, and then we head up that way, right? So if that were the case, of course, then we'd have C, D, E here, but the 4 would be way up here. And then you'd have something more like an ascending triangle. Actually, I have this in motive wave. Let me bring this over here. You see it a little bit better. So if we go A, B, C, D, E. Now, let me open this up a little bit so you understand what I've marked off here. So this, all I've done, and motive wave does this for you. So it'll show you the highest probability location for the C relative to what's preceded it here. So if I come to the B wave here, which again, these are just nice features in motive wave, and I go show me the C relative to the A. Right, here's the A, show me the C relative to it. So here would be the 618. We do it to the tick. Right to the 618. So would make you think, okay, well, if we hit the C at exactly where you'd anticipate it, are we going to get the D in the same way? Well, if we're going to go up for the D, the 618 here would put us past the B. You'd be, pushing the edge here of an ascending triangle here. But it's very common to have an ascending triangle with a flat top, right? So we get the higher lows via the C, the D, and the E. So if I finish that out, and we get the 618 here in the D and the 618 in the E. So if I highlight it here, well, that would put our 4 here at just round number. Let's call it 50, 51. So then the ascending triangle here into the E here sets us up for the push, and then I've got a little bit of fib time on this. If the 4 is going to be up here, right now the time doesn't play quite as well, right? So we've had the low prior to the 618, could have been no, it's not there, right? So you're off here a little bit here for the C relative to being precise on fib time. So you didn't get an exact 618 in time to match the 618 in price. If we go up here, again, we're going to get the 618 matching the 618 in price. I mean, I don't know that I'd bet against that. And then back again down, right, to get the E at an exact 618, and now the 4 is here, right? So that potentially, if I kind of bring this back together here, oh shit, that's too much. There we go. Let's go a little bit less. There we go. Well, we'd be, note the center line of the channel, right, would essentially be holding it, right? And that's what we were looking at before. That center line, as I had drawn it in the median lines, was a bit of a pitchfork. But here, as I'm drawing it here in the channel, just taking that center line here, potentially holding the entire correction, using the 1, the 2, and the 3 to frame the 3 pivots of the triangle, right? So that, I think, would make more sense if we get a B, C, D, E here and we hold that center line. Then the geometry starts to make more sense. Now, if I push this, take you off over here, and then looking here, now as I had drawn it before, that center line of the 23.6. Now, do we break here and go deeper, or is this the C? Right, remains to be C. So this is, if I now use what we just drew there, now you're kind of looking, well, here, I'll keep that out there. C, D, E, there's the 4, and off we go. So we shall see, right? It's tough to make a call in here, right? Until we get more information. Right now, well, we'll go down to the shorter time frames, and I'll show you what I think you'll find very interesting. Now, before I do that here, this is, well, let's see, how can I get this over there? Let's do it this way. I think I can do it this way. All right, so this is whale map. Oh, some of you may be familiar with this, but this is really striking here when we see it right here. So we can see as we sit here at this high volume node here that we are really, I mean, it is, well, what you want to notice here is the air pocket we have until we break down here to 40, where you'd have the, if you see this pivot, and this low, so prior resistance became the support. If we break here, we're coming down. This is the next area of support, right around 40. So it's not. I mean, what are we sitting at here? 47. So you could see, I mean, you could literally see the support, right? This is just a particularly good look at it here because it was so clear where the next support level was and why, if we break, there's not much there to hold it until we get to 40K, right? So, all right, let me push that back off over here. And we've been over that. All right, we've been over that. All right, remains to be seen here. So let's go down to some smaller time frames and take a look at this. Now, there's some interesting things here. So here's an 8-hour. I'm going to start on the 8-hour here. I am now out of log scale as opposed to here where I'm absolutely in log scale. Let's go back over here. So I wanted you to just kind of see this framed up here. There's some really interesting things happening here. It's just, in many ways, it demonstrates exactly what we teach you at Trade Devils University. And it's in addition to that, this is just how the market moves. Right? This will be interesting. I think for those of you who haven't seen this before, it should be very eye-opening. Now, members have all seen this before, and where I'm headed, I am absolutely certain that every member who's been with us for more than 3 days has already got these outlined here. But let's go through it one at a time for YouTube subs or people that are just kind of getting tuned into what we're doing over here at Trade Devils University. So I've got a new set of channels on here to accommodate this entire correction here. So I like the way this is framing out. So I've got really dominant pivots being highlighted here. So 1, 2, 3, 4. I've got good framing on this from the geometry. Now this is a slightly different template here. I've got well, this is essentially a 50 and a 200, but it's a little fancier. This is I think I showed this a couple of weeks ago. This is an EMA envelope. So you've got the actual EMA and then the highs and the lows on either side. That's the Lazy Bears EMA, and I'm just using a 50 there. And then this is whoever wrote this code calls it the God MA. It's the average of the 200 EMA and the 200 simple moving average. So you get the God MA. Well, kind of a clever title. So thus, right, very common, right, traders will look at this, the 200 and the 50, how they're working in relation to one another. And it's so, as I talked a little bit about last week, market makers, liquidity providers will use the 50 kind of as a median line to what their intentions are with regards to picking the pockets of the amateur and the retail trader. So it's a good reference point to have on your chart. You see here when we're trending, it's very, very good reference for support when we break it. Again, breaking on, here's the last kiss before we get up. Not to dwell on that, but just to draw your eyes to the fact that those of you that might say, oh, that doesn't look like the Vegas wave, this is very effective for shorter term trading as well. So here now, if we look at the volume profile, you can see we're sitting here at the POC. Now that's visible range here. So if we just use from high to low, so we're getting our proposed 3 pivot high and getting all of this information while we're sitting, pretty close to the POC. And then you can see the next level of support as we were just looking at it on whale map. You come down here, well, obviously here's our next big level of support tied to all of this. We'll see if we get there. There's a couple of things here. I'm just going to review this again for any new subs or new members, because we've had quite a few new members join us, well, really in the last month since Black Friday deal we did. And just recently, a lot of people have been joining us, which we love to see. So let me just review this really quickly here. Now, there's 2 algorithms that we track in the market, and we can track them because they leave footprints. We know they're institutions, hedge funds, whoever's behind them. We don't know who's behind them. Institutions, hedge funds, market makers, we don't know, but whales, call it whatever you like, but this is, they dominate the market. And the good news here is, while they're, God knows how many algorithms are running in any market at any given time, these 2 we can identify, we can track, we know what they do, what they did last. So it's important to understand what they're doing and what they've done last, right? You'll always hear me say, with regards to how you're going to approach the market, and this is something I struggle with members and students as well. It's always first, what did the algorithm do last, right? And we'll look at 2 of these algorithms. Where's the geometry? Then the Elliott Wave. Most people, when they join us, they come in guns blazing on the Elliott Wave, right? They're just totally focused on the Elliott Wave, and I understand that, but that's not the priority. It's an additional tool to help organize the chaos. We'll look at that a little bit in more detail. But to make my point here, let me bring these up again. I went over these last week here, but for any that have not seen it, where do I have them? I think I have them here. Let's start. No, that's not the one I want. I want them. They're down here. Okay, so let's start with the first one. All right, so this is one I call it the wolf range, again, because the guy who taught it to me. So we're just taking the initial thrust up here, the initial pivot here. Now we're expanding in percentages of 100. So you'll note on the way up from this range, here's exactly 200%. Here is exactly 400%. Right? Now, why do I emphasize exactly? Because there's 0 possibility that that's random. 0, none, zip. That human beings are not that precise. You hear me say that often, right? That there's no way that's anything other than software that can be that precise, right? So it's interesting. So the 200 and the 400 nail it here. Additionally, though, if you use a different pivot, you might say, we get a deep correction here, and you might look at that and say, well, here, this is the first thrust going the direction of this entire move. So it's worth looking at that, saying, well, what if I change this, and rather than using this initial range here, despite how perfect it is, well, oh shit, did I lose my place? Take note of what we get here. Yeah, let me hide this one. If I do it this way, right? So here's the initial push, right? So here's your range that you're looking for range expansion. Here's exactly 200% of that. Again, no possibility that's random, none. So we know this is an algorithm here. Now, so we have it in we've got it here where we can see it both here, right? And this one, right? All ending in the same spot, right? Again, no way it's random. Now, what's interesting is that you might look at that and say, oh, it looks like we're moving 200 and 400 on the move up. But if we look at the move down, I think just as interesting. So let me hide that and hide that. Now we come down, now seems to be working in the hundreds. So here's the initial thrust down. Here's the retrace to the 50. Here's the 100 to the tick and the 300 to the tick. Again, no possibility that's random, none. So you look at it and say, well, if that's going to continue forward, where might that be headed? Well, if we're going to head down, there's the 500 right there. It's hard to see, right, because I've got this little box drawn on it. There's the 500 right there, which would put us right back at those lows, which now come back to where we started, where we're looking at a potential flat. So if this is going to play as a flat, we'd be anticipating exactly that. We'd be looking for that, right there. Now, come back here, that's right at the 500. So if this algorithm is going to play out and we're going to break this pivot here, which we know is significant, right? This was the liquidation wick, and then all of this is just reacting to that. Now, can we sustain and hold here, or are we going lower? It'll be interesting to see. Now, there's more going on here, but this is so important that you recognize these. And the advantage here is that the thing leaves footprints. So we can see what it's done. And if it's going to, and so example, if we break here, you're like, well, shit, where are we going? Where are we going? Well, how nice to have that target right there. Which now, you put this algorithm together with the larger count, with the geometry, you start to see all these pieces fitting together. And ultimately, that's what we're trying to do, is achieve confluence within context. Confluence within context. So if we are down here, we would have exactly that. Confluence, i.e. a technical level here in conjunction with this algorithm, the geometry, the fib count, the fib swings, the Elliott count, the range expansion algorithm here, all of this would be leading to a potential technical pivot here. Now, nothing says that you must do that, but if we break and we start heading lower, good to have some targets. Now, let's, with that established here, and I think making my point here that this, again, if we keep going, right, you know, it's not like you couldn't figure this out without identifying that, because, well, shit, I mean, here's the long-term support. We can figure this out a couple of different ways, but the additional benefit of spotting that algorithm, what it's doing, and what else would be here, gives you an additional edge down here. It's all we ever get, right? Can we find a probability edge? Now, let me put that aside, because I think we've got that handled here. So I made my point there. Now let me get these. Let's hide all of these. All right. So now we'll focus in here on what we're doing here and the count, and then why we're stuck right here. Oh, here, let me do it this way. Let's go to a 4-hour. Okay. So now what do we have here, right? What is this? Well, this is not uncommon with Bitcoin. It's a bit elusive. The clean count is, well, of course, it's this, which kind of puts a monkey in the wrench. It looks like the 1, 2, 3. You have to do this a little bit. I mean, you could count this a couple of different ways, but it looks like you've got this kind of sideways movement here, very classic 4, where we come up a little bit shy on the C. So it's a flat, right? So you're going to get a 3. Well, fuck, we could do 3, 3, 5. Either way, right? It almost doesn't matter at this point, right? What are we doing here? We're just going sideways, right? Classic 4. Almost doesn't matter how you label it. Now, in addition to that, just take note, right, of the 50 EMA. Right, holding here again. Yeah, we'll come back to that in a second. But you can get a 5 down to this pivot here. Now you could do it a couple of different ways. Oh shit, actually, I think you have to do it this way. You have to go A, B, C to get your B here. So A, B, C. Right. Good luck with the subdivision. It isn't there. Right. So, but you can go 1, 2. Oh shit, I suppose you could get a 3, 4 extension in the 5. So you can get something there, but something ends here. Some piece of this ends. So an ABC into a W seems reasonable. Now we go sideways, much like a 4. If this is what we're playing here, we're just going sideways. Right? So we get a classic X. Now, of course, X could go higher, and there's nothing that says this couldn't go higher. But right now, as we're sitting here looking at it, it looks like it's kind of similar, right? A, B, C. Right? Looks a lot like what we just did up here, but I mean, just bigger version of it. Well, if we're doing that, if this is WX, what are we looking for here? Right? A, B, C. Now, do we have enough here to call that? Are we going into the A here? A, B, C? Right? Well, that would be an interesting level here. But if we're doing that at 40K, that would make me lean harder into the triangle rather than the flat, which would have us coming deeper. The flathead would have us coming down here, right? If we're going to pivot here and we start to rally, then my thought would be, oh, we're just look for another 3, right? Now comes the D, then the E, and then off we go. This is, I think, frustrating so many people, and it's so Elliotticians are struggling here. Everybody's struggling to kind of get a handle on where we're going next. Immediately, that kind of choppy, directionless, you can kind of feel traders getting annoyed, like, come on, Bitcoin. Makes you think triangle, right? It frustrates everybody, right? I mean, look at how long this has been going on, right? I've been talking about that inner channel and the proposed perfect Elliott wave for 6 months, right? Now, just frustrating people left and right. So everybody thought, we're going to the moon here. This was, oh God, the comments I got were, no way, we're off to 100K, right? Now, we roll down. Again, I get a lot of comments. No way we'll ever go down there. No way we'll ever see 30K again. Never, right? Not going to happen. Makes me think all the more likely. So again, as we look here with this box that we're stuck in, right? So interesting here. This looked like there was a chance that this was going to kick. But look at the resistance here. So we get 3 pivots here. Boom, 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 right? Another just textbook example of why you don't buy breakouts. I guarantee you there's some retail was here going, boom, off we go. Right, with no sense of context, no understanding of what actually is happening, no understanding of how they just become absolute, it's just bait for market makers, right? I mean, this is such an easy play. So how do I know that? I mean, look what happens here. So we break it by a couple of ticks, and then look at how severely they're faced, right? That's panic selling. Oh, fuck. You just, I mean, I can say it all day long. This is a breakout of a previous pivot like this may be the single worst place to enter the market long. Right, whether you're selling at the lows or buying at the highs, right? This is just a fool's play. Don't let them do that to you. Never buy a breakout. If you want to trade near a breakout, then you have to wait for this. You got to wait for it to get tested from above. Now you got the same price, but you didn't get sucked into the. It's just making a market maker's, home payment for his pad in the Hamptons. It's just stupid. It's stupid trading. Don't be stupid. Maybe that's too harsh. Trust me on this after 30 years of this. That's not a place to enter the market. Just, you're going to have to trust me on this. Or you can do it the same way I did. I bought it enough times until I realized that was a stupid thing to do. Okay, let's just focus in here because this is such a great example of the reality of the market. And I don't care what any other educator is telling you. If they aren't referencing this, they're not telling you the whole story. So this is literally, you can see almost the entire foundation of our methodology right here as Bitcoin sits in this box. All right, like why? Why can't we get out of this? Why are we going sideways? Well, let's just look at it. Okay, what do I got? A 4-hour here? That'll work. Yeah, that'll work. Okay, I've got them over here. Let's see if I can find them. Those are the bottom ones. Okay, so let's start right here. So I think I want this one first. Okay, so I'm using the last pivot swing here. So essentially what I'm doing, here's we're stalling in consolidation. Here's the meltdown, right? Here's the liquidation. Well, of course, note what happens now. All right, so from that here, here's the entire sell-off. Now, as we come back, where do we go? Golden zone. Back down. Where do we go again? Golden zone. Back down. Back to the 50. Where do we go again? Golden zone. So while the average trader who doesn't know this, right? They don't know this, right? Which is your advantage. They don't know this. So they just look here and they go, oh, it's just price action. Oh, it's just prior resistance is holding. Well, yes, but why? Why is it holding? That's why. Right? The algo is there, right, defending. Right, you can see the initial reaction here as it came to the 50, and this is so very common, right? The initial pushback, right? It's a front run on the 50. Now, that could have done it, but that would have been, does that look like that would have been enough to correct it? Well, maybe if this is going to be a 1, 2, 3, you're going to have a tiny 4, we're going to go down for the 5. This could have been all self-contained, but we get a 3. So it's pretty much... Right. If we're moving down impulsively and then I get a 3 to correct it. Now, look, in addition to, I come right into the little moving average envelope here of the 50, and I go right into a golden zone. Now, what comes off of this is a little tricky, but it looks like you got to trade. It looks like you get a 5 here. Looks like you can get a diag here, 3, and then a 5. So it looks like you got to go A, B, C, A, B, C. Now, I'm out here on a 4-hour here, so you'd see this with more detail if I went to a 1 hour. But it doesn't matter, right? We can just see it here. Here's a W, X, A, B, C to get you a Y here. So I've got a candidate here for a B. Now here we go up and we do get a 5, and this looks promising, but we ended up double topping here. It's a little tricky in here for purists here. Let's go in there so you can see this. You've got to do it a little differently. You've got to do it this way. You've got to do it this way. You've got to go A, B, and into the C. By the way, note here. Let me make that smaller. Let's do it that way. So if we go A, B, C, and here's the 2, this is the 50 EMA. That's literally to the tick, right? Before we go up. So why do I have to do it that way? Because if you were thinking the 1 was up here, you got overlap here, so you can't play it that way. It's not a diag. It's an impulse. So 1 A, expand the B down for the C. There's your 2, right. God, that's amazing. Right at the 50. Here's the power move. Big high volume candle gives us our 3, A, B, C into the 4, doesn't overlap the 1 per this count of it, up for the 5, right into the golden zone. Again, rejected at the golden zone. We say, now, hey, slow down, Sam. Yeah, so what is this? After the fact, you're finding that? Well, yes and no. Because you would start, you'd be kind of hunting. Like, obviously, we had resistance up here. This was resistance. Why don't we use this one? Why don't we use this one? Why don't we use this one? I'll tell you exactly why. Because the algorithm used this one. Now, I'm out here on a 4-hour, so this is going to look small, but if we were down on a 30-minute, you'd see this a little bit better. Let me take that off and show you why I'm using, I'll show you why I'm using that one. So here, do you see it? It's swing, retrace. Here we get in between the 50 and the 618, and then we get the free fall. So we know that this was a pivot the algorithm used. That's why I'm using that pivot, because they used it. Now, if you carry that forward, let's put this one back on. So here's our resistance down here. Now you would look down here and go, hey, that looked like, why couldn't that go? Why couldn't we get any further down here? Why couldn't we get to that pivot? It doesn't make sense. It looks like, oh, well, shit, we're going, go. Look, where's the target for this algorithm, right? It doesn't matter whether we start it here. The target is right here. Why can't we get there? Well, shit, we might get there. Here, look at this price action. We could get there we could be there by the end of the day. We could be there this weekend. So you know there's an algorithm there with that as a target. Why can't we get through it? Oh, let's take this one. That's not the one I want. I want this one. Why can't we get through it? Because the same algorithm is now on this side. So I'm taking the swing high, the swing low to the swing high. We come down, golden zone. Now this, take note here. This is significant. Now these are small breaks, but they're wick breaks nonetheless, right? So slight little wick breaks on this side. So you'd have to give the advantage to the bears, right? Because of those breaks. Now there are others that will tell you that, oh, you can use the 66 or you can use the 707. Maybe. The 65 is the one that I see most commonly, which is why I teach it. So the little breaks here would give you the advantage bears. It's now, while clearly that you got a reaction here, if you had to pick one side or the other, you'd give the advantage to the bears. So higher probability that we get this target than we get this target, because this target is right here at second target here. I know it's a little hard to see, but if we come out of this, there's that target right here, right? It's a 23. It's on top of the second from the smaller one. So if we're going to get up and get, oh, pardon me, that's the 786 here. Let me take that off so you can see it. No, I want that one. There it is. Oh, shit. There we go. So let me get this one. Oh, hell. I'm losing it. Okay, so it's the 786 of the smaller. Hey, shit, I don't know that it matters. I just want you to see all of them. Let's get that one off and get this one on with this one. All right, so So many of them. So where's the trade? Is there a trade here? We are just sitting between two golden zones with the advantage to the bears. Well, so now you look at that and you say, well, wait a minute. Stay with me here because I know this gets a little tricky. If I've got 1, 2, 3 pivots at a golden zone, what's the next thing I want to do? I want to put a set of median lines on it because I have a golden corner pocket. Now, think about this for a second. Now, if we're going to go down and get some of these lower targets here, this is getting rather bearish. Now, we don't know, we can't say with certainty that an algorithm is using this pivot relative to the median lines. Could be something higher, but you would start there since that's what triggers this golden zone. So if we're going to go down to some of these lower targets, all of a sudden down here at this, well, shit, you'd want to be mindful of possibly a shift or possibly a modified shift. But right now, I would start with original since this is, while it's part of a correction, this part of the correction remains to be revealed yet, right? So we don't know what we're going to get coming out of here. But some of these areas down here, now we're breaking 30 and we're getting to be a more serious correction. But right now, as it sits here, this golden corner has 80% probability of getting to that median line, right? Nothing changes just because that's inconvenient to what we'd like to see happen here. That 80% is in play. Well, slow down though, because you'd say, well, okay, well, we've had some slight wick breaks here, which would be maybe, right? Maybe there's a variation on this algorithm that's giving it a little more room. Maybe using the 66 or the 707. Maybe they stayed with it, right? We didn't have a close below that. Maybe, right? You can kind of talk yourself into it. Well, let me just hide that for a second, because what that would mean is that we'd have the exact same scenario here going the other direction. So if I use this, oh shit, here, let's use this one to this one. That's the last one I've got. Okay, so I'm using, where do we start here? It's our first trip into the golden zone off of this pivot coming down here. While I've got a break here, this is spot into the golden zone. So I have a candidate here for a golden corner coming this direction. Now, already, right, as we look at this and we say, oh, well, I can understand why we didn't get there because we ran into the sell side algo. Remember trading principle number 4. Now, members will know this, right? Maybe white belts, but those that have gone through the blue belt will know this, where we go over all the median line principles from Dr. Andrews. Remember, a failure to make, or this has the same 80%, although I'm hedging a little bit here since we've had the break, but this is coming right out of a golden zone. We have the same 80% probability via the median lines. Let's set the algo aside for a second. Just the fact that I've got a corner and I've got 3 pivots, that 80% is in play. Well, remember trading principle number 4, a failure to make the median line sets up a move equal to or greater than the move that failed to get there. I mean, it's right in your face, right? A lot of people say, oh, yeah, Andrews, he was writing in the 60s. The market's so much more sophisticated, so different now, right? You can't apply any of that stuff to, crypto, right? We're too hip for that. There it is, right in your face, right? There's trading principle number 4 happening. Failure to make the median line, right? So equal to, or greater than. So which side's going to win here? Let's put the other one back on. Oh, shit, if I can find it. Is it this one? There it is. Okay, so you see this little battle we have? 80%, that's already failed, right? We've already failed because we've come back to right where we started. Now, if this breaks again, will be interesting to see, right? So it looks like this golden zone here, as I'm recording this, is going to get tested. Now, you'd be leaning bearish because we had these slight breaks here. You'd anticipate now higher probability that it breaks. Look up here. 3 times tested, all 3 times it holds the golden zone. So who's got the advantage here? Not these guys, right? It's bear's ball. So if we're going to come down here, and this is it, right, where we started per the Elliott count, right? Can we get an Elliott count here that would be something that would contribute to our analysis. Right? See, that's why you got to look at the Elliott this way. Right? It gives us, I often harp on this word, context. So what if this, can we put together a count here that stays consistent with rules and guidelines that could give us some sense of direction of the potential outcome here? Well, if this is a 3 into a W here, and this is a 3 into an X here, we can anticipate we're looking for a 3 to follow. So are we putting in the A, the B, and the C to come down here and get that algo target here from this golden zone? Right? If this one's going to break, this bottom one's going to break, which right now looks most probable, not inevitable, but again, given those breaks, A, B, C puts us down here. Now, do we have the Y in? Is that the 4? Are we going to have a flat with a very truncated C wave? Don't think so, right? And even there, it would be a 3, so you'd be already thinking, oh, triangle, because I got a 3, 3, 3, 3, right? Now you're thinking triangle, which brings us back to, where are we now? Well, so as we sit here, we know, well, here, look, as we sit here, right, this is the 6-1. Well, also, look at the beautiful, it's just like, you can't make this shit up. Look at the 3-4, right? So here's some Elliott for you. The 3-4 is a good reference point for a correction. We come back to down a degree to the 3-4. Resistance, resistance, support, support. Well, now we know, right, if this is going to keep coming down, well, let's just say we break it. Now, what do we have here? It doesn't quite work as an impulse, because you'd be thinking, oh, 1, 2, is that the 3? Because this sure looks like a 4. Is that how I'm going to finish it? The subdivision doesn't quite play that very well here. This plays better because of this liquidation wick. This plays better as a 3, followed by a 3. Now, what's coming next? Well, we're going to find out here. Well, I'd like to think, because sooner or later we're going to break out of this, right? We're not going to do this for one. We're going to break one way or the other, right? Now, but this is just strike. I mean, it's just in your face. Where's the support? Right now, if we break this, remember, if we break this, let's assume we do, it becomes the resistance. W, X, Y. Right? Now that would be deep. That'd be deep here. If it's going to be a flat, right? If we're going to do it as a flat, we've got to do 3, 3. We got to get a 5 here. Well, I think this is getting pretty tricky to turn it into a 5. How would you do it? Right? I mean, you've got an impulse here. I mean, you can count it a couple of different ways. 1, 2. Doesn't quite work, right? So that makes you think, oh, it's more likely that's why my primary would have us doing a 3 here, right? So 3, 3, 3, triangle. Off we go. Right now, it looks most like we're headed towards triangle, right? Which would be right back to where I started, right? Very consistent. Since we had sharp, now we're looking for a sideways. I mean, we're going down to challenge that as I'm recording this. Oh, let's zig in there. I mean, these are the wicks that broke. I mean, again, we could get here pretty quickly. We could get here this weekend. So now, as you look at this Elliott count in here, is it helping? That's what I always try and remind members. Right? Don't get so caught up in the Elliott that you can't make a trade. To make this to take a short here, do I need the Elliott wave? No, I don't. Nobody does, right? You don't need it, but it's just another way to kind of organize it. You have to be drawn to it, right? Elliott you have to like the puzzle. It becomes a question of, okay, well, can I make a trade here without it? Absolutely. But can I solve the puzzle here with the rules and guidelines that Elliott and Prechter came up with, right? Emphasis Elliott and Prechter, because pure Elliott from Ralph Nelson Elliott is not Prechter Elliott, right? Prechter added a lot. Okay, so with those rules and guidelines, can I solve the puzzle? And if I can't, right? If you're dealing with something like, fuck, I don't know what it is, you take it off. If it's not clear, it's not helping. If it's unclear, don't let it keep you out of a trade. Don't let it keep you out of an algo sell here with a golden corner pocket because you can't figure out the Elliott. Often I'd find myself going, oh, fuck, I don't know what it is. Because the market hasn't revealed enough. So you've got incomplete information. You're trying to solve a puzzle and you don't have all the pieces. So don't get caught up in the pursuit of perfection and let that keep you from taking a decent trade. Really interesting, though. I mean, just the box that we're sitting in, well, once we break, we're going to have clues, right? So again, advantage bears. Now, are we going down to complete this, down this far? Well, we shall see. All right, it'd be interesting because if we fail, remember, if we fail to get there, right, now think about this. If we fail to get here, just as we had the same rule applied on the way up where we failed to get there, if we failed to get up here, wherever this pivot is, sets up a move equal to or greater than the move that failed to get there, right? Can you kind of see how that could play? And now we're back to the triangle, which that's what looks most probable. We'll see. Right now, this anything higher. Let's just look at it. If let's say we went to the dominant, is that changing it much? Well, we'd lose the golden, right? You'd have shit. I don't know what you'd have here. I'd have to draw it up. But any of these pivots here, we lose the golden. Here's the golden, right? Because that's the swing that gives us this clear resistance, and we don't have to wonder what's happening there. It's not price action. Get over that. Anyone who's not highlighting this to you is not giving you how the market moves. Now, again, I'm not I didn't discover this. Two, I get all credit to David Halsey, who was the first to write about this. But if you're not including this in your trading, you're blind to what's going on. You'll buy right into. I guarantee you, retail bought into this because they don't know it's there. You're, as I often will say, you're walking through a landmine with blindfolds on. If you don't know what this algo did last, you'll buy right into it. Now, take this out of it. That's, as I said earlier, that's still an incredibly stupid place to enter. Well, pardon me, I shouldn't say it that way. That's a low probability place to enter the market. Right? Let me not be so harsh with that, right? So that, I mean, I was that guy for a long time who would buy into any breakout, right? But at this point, I mean, if you're a subscriber or a member, I'd like to think you don't do that anymore. It's just not worth it, right? I mean, sure, there are going to be times. There's no question, right? Now, don't send me a bunch of charts with examples of breakouts. I understand. There's going to be times where breakout flies, right? At some point, something has to break to make it break out, right? If we break here, is that a breakout? I'm just saying this is a terrible, pardon me, this is a low probability location to enter long. Let it break and then let it retest. Then, right? Did you lose any money? No. Now you're buying at support instead of trying to anticipate, oh, it's going to go. That's what retail does. I think I got everything covered there. Well, I know this is going to be interesting to see how this plays because you've got. This will be really interesting to see what comes out of here. What are we going to get? Right now, I think the ABC into the X makes sense, but as to what we've got coming down here, oh shit! Even if we go to an hourly. Is it real clear what we've got here? That sure looks like a 3. Is this A, B, and we're going into the C? 1, 2, and we're going into the 3. Well, one thing for sure, we got to pay attention to these lows because we know that's where the golden zone is, right? With slight breaks. All right, so we got to pay attention. So this would be, and here, you could just use this line, or probably what I'll do. You just put an alert on it. If we start to break down here, well, now of course look where we are. Right now we're back into the support that was already tested here. This is the range that we'd be coming down to test that range. Right now, look at the volume profile. Right, we got a big slug here. Let's move it back. We got a big slug here of a potential support. Just potential. We're coming back into this area where we launched from. So really, we'd be making a full round trip, all right? Let's go back to the 4. It's really the middle of the range. If we come back to this, all right. So here's the clear support, second mid support. Here's our resistance up here. So if we're coming back into the mid support, Well, it's going to be interesting to see if we hold, right? Now, note what would be happening. Back to where we started here. Can we break that trend line? If we break that trend line, what's next? I'm not saying we're going down here. I'm just saying you can't say, oh, well, we're never going down there. I don't know that I'd say it that way. I will remind you that if we're doing it this way, if we're thinking about length in terms of a sideways, right? A sideways correction here. Well, here's the 100% right here at the second algo target. I mean, within a few pivot ticks, right? If we're coming down for 100%, and that's me using the lower pivot, right? If I use this one, now we get, again, it's equally close. I'd probably use this one. That's the Elliott way to do it. Now, would an algorithm do it that way? All we're trying to do is identify the length of the A projected from the B for a target for the C, right? If we're going to get the flat, right, where this is, if we're going to end up, we're going to have to relabel this, and we're going to get a 5. Again, I don't know how we're going to do it. All the more why I don't think we're going to get a flat. I think we're going to get the triangle, because otherwise we got to turn this into a 5. So how you doing that? 1, 2. It's not 3. It's not, right? So the higher probability is we're in the midst of a triangle, and that would make sense as to how it's frustrating so many people. Here, if we stay corrective here, then the shift pitchfork is where I would start. Now we've got this coming in here, coming in here. Now, could we have a flat that ends up right here? Yeah, we could. Nothing says the flat has to come down and equal this in exactly, right? We could get that. Off we go. We'd still be labeling this a flat, and we'd have our low in here. Wouldn't that just be remarkable, right? We'd be at the center line. We'd be at the algo target. We'd be at the edge of the support here per the volume profile. We'd have the shift modified pitchfork coming from our 80 to give us our 80% probability here right into the algo target, right at the prior pivot here, which would eliminate any, well, I think it's well gone now, any idea of 1, 2, 1, 2. I think we're past that. I think that's the lowest probability that we've got right now. So coming down into this, shit, where would we be buying? 38? Anything under 40. Oh, my God. Anything under 40, even if we go further, I would just be averaging down. Right? I'd be dollar cost averaging. I'd start here at 38, 40. I'd probably start at 40. 35, 30. If given the opportunity. Boy, does that set up beautifully. For the push, what did we just say? We just looked at it at 126. I think was our length of the A. This was our target up here, 126. So don't be discouraged. There's a lot going on here. I mean, triangles frustrate everyone. Everybody gets annoyed in a triangle. Right? Nothing seems to happen. Again, I've been talking about this for many, many months. Same chart every day. Every time I start it, because we haven't broken out of it. Right? People are getting frustrated. They're annoyed. They're bored. Come on, Bitcoin, do something. Do something. Well, careful what you wish for here. Right? That's a very real possibility of the something that it may do. So there we go. Okay, I think I covered everything here. Just a reminder, this is going on here. We'll keep this going for until the January 3rd. Educational only. If you want to really understand what I just went through and how all this fits together and turns into a methodology that's duplicatable and repeatable, the belt system is the way to go. All right, guys. I'll wish you a happy Friday, a happy end of the month, end of the year, and a happy new year a little bit prematurely. I will be back Monday with our live streams. Those have been very popular, so we'll continue with those. So live streams Monday and Tuesday of next week as we get back to normal trading and volume picks up again. My partner on Wednesdays, Money Crypto, does his thing, and then I'll be back next week for a Bitcoin Friday. It'd be interesting to see how this looks a week from now. Hopefully, we've had some progress. Okay, guys, with that, I wish you guys a great new year, and we'll catch you next Monday.